In today's video, we're going to analyze 3 stocks using technical analysis. We're going to start with Target, we're then go to Coke, and then going to finish off with GM. Before we start, just remember we are not financial advisors. We're not providing financial advice here, and you should do your own research before you trade.
All right, yeah. So first of all, Eric has been talking about Target for a long time, and I have not heeded his buy recommendations. So we're going to take a look at Target. Clearly, Target has been pretty unstoppable. I mean, even in March, it didn't decline all that much compared to the major market indexes. Only went down 29%. Yeah. But then it just like gangbusters just has been pretty unstoppable. It's been following an upward trending channel. And although it hasn't really been hitting the resistance and support consistently, it is bouncing in pretty high percentages in between. So for example, if you had seen this bounce here, if you'd bought somewhere on this bounce, and you had plenty of days to buy the bounce here, even though the bounce is upward trending, if you'd bought here, you could have sold anywhere in here. Likely a lot of people did sell here. That's why it started to trend downward. That's still a 24% gain. That's pretty crazy for being in a channel that's giving pretty clear buy signals. As it's been going up into where we are today, it looks like it's continuing that trend. However, as we noted in our analysis of the indexes in our previous video, it's possible that we're getting into a sideways channel trend here. Now, I'm completely speculating on this. I don't really have a whole lot of data to back up this idea, except that the indexes look like they could go that direction. And the indexes act like a river, and the stocks are in that river. They can definitely swim upstream or side stream or with the stream based on their own little details.
Now, Paul, is this a buy right now?
For me personally, since I'm starting to wonder if this is going to be a new sideways channel, it's not a buy. It would have been a buy as soon as it bounced. You know, if I had drawn this new trend line right here that we just drew, then the buy signal would have been right here, right in this area.
Yeah.
And if we had bought there, right now we would be about 3% up. You know, my typical goal.
Isn't there the argument it's going upwards to that other line at the top of the?
Yes, I just personally don't like to buy midway through a trend, because a lot of times what happens is it does this and then it you know, it does this, it meanders. A lot of times it meanders before it finally goes up here. It might even do this and then finally go to the top.
Yeah.
You know? So there's lots of room for a stop loss. But yeah, you know, look, if you're a little more aggressive trader and you feel like, you know what, this is an unstoppable stock, that's not a bad place to buy, because the upside is here, which is the 5%. The downside is here, 7% potential downside. If the trend really is moving sideways, then it might bounce back down before it bounces back up. So that's 7%. Now, if you are the kind of trader that will set larger trailing stop losses, maybe you set a 10% trailing stop loss, that might work. Now, this range here is 13%. So that's a lot to stomach for some traders. I have typically been willing to do anywhere from 5 to 10% trailing stop loss. So that can allow a stock to run if you are feeling particularly bullish about it. If you're not that sure about it and you're wanting to be more conservative about it, I'd wait till it hits the top or hits the bottom so you can see what it's going to do. Yeah. That's a conservative approach. A more aggressive approach is, buy it in the middle here, and chances are it is going to go up here, or it might go back down here, which would be, again, like a 6 or 7% decline. But hey, if you have a 10% stop loss, you're just trying to protect it from going below, breaching this support line. And then chances are it is going to bounce up again like that. And that's going to give you your 7%. It'll have to go up 13% to give you that 7% gain. But yeah, likely you will get it. What's our next stock, Eric?
We're going to do Coke.
So Eric and I bought right in this range here. Our stop loss, we have a 5% trailing stop loss. So if it breaches this support line, we're worried that it's going to keep going. So that's why we set that trailing stop loss. So we're in good shape right now. It's been going up steadily. I think we're about 1 or 2% up from where we actually bought, although it's about 3% up from this support line here.
Yeah.
It has a lot of room to go. It has, it's obviously demonstrated that it's capable of going this high. So I expect it probably will. As it gets past my goal of 5%, I generally have a 5% goal for gains. I will trim my trailing stop loss to maybe 1%, which is basically, you're basically going to get stopped out most likely, but I'm not greedy. I just want to get my 5%. So as it starts getting up around 6 or 7%, I'm going to put in that 1% stop loss. And hey, it's very possible that it's just going to keep going up from there. Then that's icing on the cake. But that's my point of view. We'll do another video on that down the road of our individual trading styles. Some people call that money management, and everybody has their own approach to how you do that. Yeah. And Eric has his ideas too, so he'll be sharing some of those.
Cool. So we should go on to GM.
Okay. GM has had some pretty clear signals in the past here. This signal back here, now I drew this with 2020 hindsight, but only to make a point in that the pattern that it created from back in 2019 to right before it crashed in March was a descending triangle. And a descending triangle is basically foreshadowing or indicating that you're going to have a downturn. And it did. Obviously went down substantially. Now, somehow the pattern predict a pandemic or the effects of the pandemic? I don't know. It's tarot cards. In many ways, it's like tarot card reading. And the patterns do work because people think they work, and that's why they work. So it's kind of a weird thing about that. But the point is, this pattern predicted a downturn, and I would have sold. Or I would have had if I had owned the stock then, I would have had my 5% trailing stop loss. Or maybe if I was feeling really bullish about it, I would have had a 10% trailing stop loss. And it would have stopped me out, somewhere in this area right here. I would have been stopped out, and I would have avoided this decline of 48%. Yikes. So that's what a stop loss can do for you. Now, since then, check this out. I started watching it. I started watching GM somewhere in this area right here. I was starting to consider to buy it. And the only reason why I considered buying it is because I own a GM vehicle. And so I was just curious. It was just pure curiosity. So I said, I'm just curious to see what a company like GM is doing during the pandemic. And I began to watch it, and I saw this uptrend, and then an ascending triangle formed. And I decided this is a no-brainer. So I invested in it, and I invested in it maybe a little too soon before I saw if the pattern was truly going to follow through. I bought the first time here and got stopped out. I had my 5% trailing stop loss. I bought somewhere in this area, and I got stopped out by the time it got down here. But I kept watching it, and it continued the pattern and hit that ascending triangle again. And then I bought again. This time I bought right after it crossed over the ascending triangle. So I've held it all of this time. I've held it all the way up. I still hold it. I haven't changed my position on it. And I'm going to keep holding it because I'm actually investing in it for the long term. But I've been doing technical analysis on it as though I was trading it short term.
Yeah, and you've done very handsomely here. Would you, at this point, would you look at or consider buying some more?
If I was strictly trading this on a short-term basis, I would now be setting my stop loss. I don't want to be greedy. If I was just doing this short-term, I'd be selling it right now for sure. I wouldn't even want to buy it right now. Would you buy it, Eric, right now?
I would not. No, I would not buy based on technical analysis at this point. I would wait for it to start going down a bit. and I'd want a little bit more validation on the support line at this point. So no, I wouldn't purchase. Yeah.
This super extended support line here doesn't really mean much to me. It's, first of all, it's in a short period of time. I only drew it to show that it's, what it's doing. But the truth is, this is what I expect to happen. I expect it to maybe even come down this far. That's 27%.
This could be what is that trend called? It's, is it the two shoulder one?
Double tops are tricky because for it to be a true double top, it'd have to go down here. And then now you would have, would have broken the trend line in this direction. That would indicate a double top, a true double top, and most likely a downturn or a correction of some sort. It's too hard to say right now. Is this really a double top, or is this just part of a pattern that it hasn't completed yet, and it's gonna start doing this? I sort of think the stock is ready to take a little bit of a breather, and it might. And the way it might take a breather is by going sideways for a while, which that's a great opportunity for short-term trading when it goes sideways, because then you can see a pattern.
Yeah, and like you stated in our previous video where we analyzed the indexes, like there seems to be something going on with like sideways channels at this point, like taking breathers. We probably need another week or two to really validate that, I would think, but we're potentially seeing it here too. I mean, it's pure speculation at this point, but it could be something that's happening. If you want more information on that, we've linked that video below as well. But yeah, at this point, this is not a buy, honestly.
No.
Yeah.
You'd have to have a strong stomach to get in now after being so overextended.
Yeah.
Our next video, we'll pick some more stocks. So stick with us.
Thanks so much.